Intel is cutting thousands of jobs. Today, the company said it has mostly completed plans to cut 15% of its workforce. The layoffs are first major decisions by the new CEO that took over in March. Intel says the staff reduction is, quote, designed to create a faster moving, flatter, and more agile organization. Part of the cuts include scrapping projects in Germany and Poland and slowing construction on its Ohio chip factories. This comes after the company filed a layoff notice here in Oregon to cut nearly 2,400 workers.
Intel Corporation designs, develops, manufactures, markets, and sells computing and related products and services worldwide. It operates through Intel Products, Intel Foundry, and all other segments. The company offers microprocessor and chipset, standalone SoC, and multi-chip package, computer systems and devices, hardware products comprising CPUs, graphics processing units, GPUs, accelerators and field programmable gate arrays, FPGAs, and memory and storage, connectivity and networking, and other semiconductor products. It also offers silicon and software products, and optimization solutions for workloads such as AI, cryptography, security, storage, networking, and leverages various features supporting diverse compute environments. In addition, the company provides driving assistance and self-driving solutions, advanced process technologies enabled by an ecosystem of electronic design automation tools, intellectual property and design services, as well as systems of chips, including advanced packaging technologies, software, and system. Further, it delivers and deploys intelligent edge platforms that allow developers to achieve agility and drive automation using AI for efficient operations with data integrity, as well as provides hardware and software platforms, tools, and ecosystem partnerships for digital transformation from the cloud to edge. The company serves original equipment manufacturers, original design manufacturers, cloud service providers, and other manufacturers and service providers. Intel Corporation was incorporated in 1968 and is headquartered in Santa Clara, California.
Join me as I dive into the shocking news about Intel cutting 24,000 jobs overnight and try to figure out what this means for the tech industry. Intel, one of the biggest names in tech, has just announced it's slashing 24,000 jobs. This news has sent shockwaves through the industry, and for good reason. It's not every day you hear about a major company making such massive cuts. The scale of this move is huge, and it's got everyone wondering what's going on. These job cuts are significant, not just because of their size, but also because of what they might signal about the state of the tech industry. Is this a sign of trouble for Intel, or is it a strategic move to stay competitive? Whatever the reason, 24,000 people losing their jobs is a big deal. This news is especially interesting because it comes at a time when the tech industry is going through a lot of changes. New technologies are emerging, and companies are having to adapt quickly to stay ahead. Intel's decision to cut jobs might be a reflection of these changes. To understand why this is happening, let's take a look at Intel's current financial situation. The company has been facing some tough challenges lately, including increased competition and changing market trends. Despite its efforts to stay competitive, Intel's financial performance hasn't been ideal. In recent years, Intel has seen its revenue and profit margins decline. This has put pressure on the company to make some tough decisions, including cutting costs and streamlining its operations. The job cuts are part of this effort to reduce expenses and focus on more profitable areas. Intel's stock price has also taken a hit, reflecting investors' concerns about the company's future prospects. With the tech industry evolving rapidly, Intel needs to make some big changes to stay relevant. The question is, will these job cuts be enough? Intel's CEO has been trying to turn the company around, but it's clear that more needs to be done. The company has been investing in new areas, such as artificial intelligence and autonomous vehicles. But it's a tough market. Intel is up against some fierce competition, and it's having to make some hard choices to stay ahead. The job cuts will affect employees across various departments and locations. Intel has said it's committed to supporting those who will be leaving the company, but it's still a huge blow. These are 24,000 people who will no longer be working at Intel, and that's a lot of talent and expertise walking out the door. According to Intel, the decision to cut jobs was necessary to align its workforce with its business needs. The company says it's focusing on areas that will drive growth and profitability. This includes investing in new technologies and markets, but also being more efficient and streamlined. This move by Intel is part of a bigger trend in the tech industry. We're seeing a lot of companies making similar moves, cutting jobs and restructuring their operations. It's a sign of the times, and Intel is just the latest example. These changes are happening because the tech industry is evolving rapidly. What's interesting is that Intel's decision to cut jobs aligns with industry trends. We're seeing a lot of companies making similar moves, cutting jobs and restructuring their operations. It's a sign of the times, and Intel is just the latest example. To give you a better idea of what's going on, let's look at some numbers. Intel's job cuts represent about 15% of its workforce. That's a significant reduction, and it's going to have a big impact on the company. The job cuts will be implemented over the next few months, with some employees leaving immediately and others staying on for a transition period. Intel has said it's committed to supporting those who will be leaving the company. Some industry analysts have been quoted saying that Intel's decision to cut jobs was necessary. They argue that the company had to make some tough choices to stay competitive. Others have expressed concerns about the impact on employees and the company's future prospects. Jeff Keyes, an analyst at New Street Research, said, Intel's decision to cut jobs is a sign of the company's efforts to transform itself. It's a tough market, and Intel needs to be more efficient and competitive. Rosenblatt Securities analyst Hans Mosesmanin also chimed in, the job cuts are a step in the right direction, but Intel still has a lot of work to do to regain its footing in the market. These quotes give you an idea of what industry experts are thinking. They see the job cuts as a necessary move, but also acknowledge that Intel still has challenges ahead. So what does this mean for Intel's future? The job cuts are a big deal, but they might just be what the company needs to stay competitive. Intel is trying to adapt to a rapidly changing market, and sometimes that means making tough decisions. The broader tech landscape is also worth considering. Intel's job cuts are just one example of the changes happening in the industry. We're seeing a lot of companies making similar moves, cutting jobs and restructuring their operations. In the long term, Intel's decision to cut jobs might pay off. The company is trying to focus on areas that will drive growth and profitability. If it can execute on this strategy, it might just come out stronger on the other side. To sum up, Intel's decision to cut 24,000 jobs is a big deal. It's a sign of the company's efforts to transform itself and stay competitive in a rapidly changing market. The job cuts will have a big impact on employees and the company as a whole. The potential long-term implications are still unclear, but one thing is certain: Intel is trying to adapt to a new reality. The tech industry is evolving rapidly, and companies need to be agile to stay ahead. If you're an Intel employee, this news must be tough to hear. But if you're a shareholder or just someone interested in tech, it's worth keeping an eye on how things play out. What do you think about Intel's decision to cut jobs?
If you were paying attention to Intel's public financials over the past year, the writing was on the wall long before they announced tens of thousands of layoffs. So let's break down the numbers and the signals that hinted this was coming. First, the most glaring red flag was the bottom line. In their most recent quarterly earnings, Intel reported a net loss of $2.9 billion. That's not just a bad quarter. That's almost double the $1.6 billion loss they posted in the same quarter of the year before. And here's the kicker. Revenue didn't collapse. It stayed roughly flat, around $12.9 billion. That tells you the problem wasn't a sudden drop in sales. It was that their costs and inefficiencies were eating away at any chance of profitability. When you dig deeper into those costs, the picture gets even worse. Intel's gross margins, which measure how much money they keep after making their products, fell by nearly 10 percentage points in just one quarter. That's a huge drop for a company their size. A big reason for this was a $1.9 billion restructuring charge, basically the cost of reorganizing the business, plus an $800 million impairment charge where they had to write down the value of certain assets, and another $200 million in one-time costs. All told, these charges pushed their operating margin, which is a measure of the profit they make from core business activities, down to negative 24.7%. That's deep in the red, and it's not sustainable. Now, here's where it gets really telling. Even though Intel still had over $20 billion in cash on hand, they were burning through profitability so fast that credit agencies took notice. On August 4th, Fitch Ratings downgraded Intel's credit rating from BBB+ to BBB. For most viewers, that might not sound like much, but in the world of corporate finance, that's a warning shot. A downgrade means investors and lenders see you as a bigger risk. Fitch specifically cited weak demand, execution challenges, and an overall weakening financial profile. That downgrade alone can make borrowing more expensive for Intel, which only adds more pressure to cut costs. When you step back, you see a company facing a dangerous combination: flat revenue, collapsing margins, huge restructuring costs, and a drop in investor confidence. It wasn't just about one bad quarter. This was about a business model that wasn't keeping up with the industry's shift toward AI, custom chips, and more nimble competitors. Even with strong cash reserves, Intel's cost structure was simply too heavy for the environment they're in. So when leadership announced that they were cutting about 24,000 jobs, roughly 15% of their global workforce, it wasn't just a random decision. It was a calculated move to stop the bleeding, realign their expenses with actual market conditions, and try to win back Wall Street's confidence. The takeaway here is that public financial data often gives you clues about a company's next move long before the headlines hit. Losses that grow faster than revenue, shrinking gross margins, heavy one-time charges, and credit downgrades, these are all signals that something big, like layoffs, might be on the horizon. In Intel's case, the numbers told the story weeks before the press release did.